Alrighty, welcome everybody. It is January 17th, 2024. So I've been trying to be pretty consistent with a weekly video Zoom session every single Wednesday, and tried to bring in a lot of different folks. So we had Gabe on a couple of weeks ago, and Igor and I did a session, and we're working through just making sure that you get exposed to lots of different things in here. And as you guys are all aware of, or at least most of you should be aware of, Candy Recker is one of the moderators here, and she's been doing a fantastic job, just keeping the Discord rocking and rolling forward, and doing a lot of work for you guys to find out where stuff is that that you may not know. So she's been doing a great job. But if you're in her channel as well here, so when you go to the Candy's Corner channel, and you look at that, she's got a variety of different posts there. If you haven't checked them out, jump in there and check that out. But she does a market structure review there periodically. Candy, if you're doing it weekly, I think it's a couple other ones pop in a couple of days later. So I think as things move, I'll let her talk about that. Well, what I want to do today is there was some comments in another section, another channel about how Candy is using market structure to potentially place 1-1-2 trades. So we have really two ways of doing things, and I don't know that anyone has the great nomenclature on this, but one are campaign trades, which is essentially when we're putting on these, for me, it's long-term 1-1-2 trades. That's my campaign. Okay, putting those on. If it's Igor, it's the Monday, Wednesday, Friday SPY puts, naked puts that he puts on. Those are campaign trades, meaning pretty much rain or shine, for the most part, we're putting those trades on. And it's a campaign where we're laddering those out. And so anything they're doing a structured version of it. I used to do a lot of the weekly strangles on ES and gold as well. That was a campaign style trade where you put them on, take them off, and it's pretty mechanical. So you have campaign trading, which is to me, forms a core function of my trading styles. Doesn't mean it has to be yours. And then you have either opportunity trades or whatever you want, discretionary trades, however you want to call them, that you're going to put on when the time is right. I don't mean the timing is right, although it could be timing, but those trades are put on when buying power presents you with an opportunity to put on new trades, and you've already got your campaign trades going. So what else am I going to put on? Well, there's a couple tools that you can utilize, and every single night I do a video. And if some of you watch the video, some of you fast forward through the first 15 minutes of it just to get to the trade stuff. But I've made it a pretty good habit of telling you why I do that video at night. And it's not because I'm looking to get rich on YouTube, because you can't make any money on YouTube with a bunch of with a couple thousand people following you. Okay, you make a little bit of money, make more money trading. I made more money in 0DTE today than I'll probably make in YouTube for a while. So the reason I do that is because it holds me accountable, number one, for making sure that my trades are smart, or at least I feel they're smart. So I don't do crazy stuff here. But the other reason too is I look at the markets to identify where are opportunities in the market. Where do you see, I'm not reviewing SPY because I just want to know, what the market's doing. Because I want to make a trade on SPY necessarily. I want to know what's the overall market structure look like for me. Okay, that's my simple way of doing it. And I want to see, I look at a couple of the major indexes. I look at some of the futures that are out there, and then I'll look maybe at some sectors and some individual stocks, not because I trade individual stocks, because I don't, but it doesn't mean you can't. Okay, everybody's got to do their own style of trading. Well, anyway, Candy, who's been doing this a long time as well, has some really great training here that she's going to run with you today. So that was my long intro. So she's going to share her market structure and how she uses it potentially to figure out what types of trades, when you're talking not about campaign trades, but when you're talking about those discretionary or opportunistic trades that you put on, how you can use this to your advantage. So from that, I'm going to turn it over, Candy, to you, and you can jump into it. You are, there you go.
There. All right. Good afternoon. And Tom, thank you for inviting me today. And greetings to everyone. Welcome and thank you for coming. I look forward to spending about an hour with you reviewing market structure, how I use it, what is it. And I do use it for opportunity trades as well as I'm a rain or shine campaign trader on long-term 112s. So I'll show you how I use it, how I apply it for many opportunities. So thanks again. We'll get started on the agenda that I'm going to do is I have a presentation to give you the top-down version. I have an Excel spreadsheet that goes into great depth of the markets, sectors, and stocks. And then we're going to get our hands dirty in the charts. And I asked the members to give me some tickers that they wanted to see this applied to. So I have some of those and I'll review that also. And if you have any questions, I put a link of where to go. Tom identified the area. Go put your questions there if I don't cover them. All right, what is market structure? Well, it's a combination of taking multiple time frames to frame the market to help with decision making. I view price as king, and just like our Tom King, and it rules. And sometimes different indicators kind of don't really identify price. They're lagging sometimes. So for me, price is leading, and I like to focus on the price structure. I then add a momentum indicator that shows me the direction of the trend, the strength of it. And then I have a squeeze indicator that helps me show when price is consolidating and when price is about ready to bust out and make a move. Now that move could be up or down. And the last indicator I use helps me identify when that move is being made, how fast is it going? Is it just a regular two-sided market? Or am I breaking out with significant acceleration that I might want to take advantage of riding that wave or doing something with my portfolio? Or if I see something breaking to the downside, it's a tool that I use on how to protect my portfolio also. So it's my roadmap to the markets where I'm not listening to news. News is noise. And if anybody tries to figure out what direction the Fed is going or when rates are going up, or it just takes all of that decision making off the table for me. I don't have to guess. I just watch my market structure, and that's really all that I need. So it gives me great confidence putting my capital. I trade 5 different accounts from 50K up to 100 or 800K. And so when I move my capital in the market, it gives me the confidence to really know what I should be doing and how I should be positioning my trades. So why do I use it? It's a trend following system. I try not to front run the market. I try to let the market basically show me what direction it's going, what strength, what speed. And I include a reversion to the mean, and I'll show you right now the market keeps retesting the reversion to the mean. And for me, what that means is it reverts back to the 21 EMA. And when the market, like it is tenuous and worried, it's like somebody wringing their hands. They keep reverting back. It's a touch and go. It touches off the 21, recovers that bullish structure. When we're above the 21, we're in a bullish structure, but it keeps moving up. But currently the ES is having problems around the 4,800, the most recent highs, and it's having some struggle time. It needs some gas in its tank that it's going to be looking for. And you don't need charts really to use this method. It's an old floor trader method. When they couldn't, read charts, they would read price. I also don't want to put my own market bias into my decision making. And I do a weekly analysis of the entire market or the things that I watch, and then I watch it with daily updates. But my week sets out how I think things are going to go, and then I just watch and make changes from there. I'm opportunistic focused. I grew up in a educational and trading company that focused primarily on directional trading. I'm not a market timer because I've always been a premium seller. Even though I grew up in the directional market, it really wasn't what suited my needs the best. So I adopted and always was a premium seller. It shows a wide lens across many time frames of the market. So you're not getting a small, you're not just looking at a 4-hour chart. You're really looking at a yearly chart, a monthly chart, a weekly chart, and a daily chart. So you're incorporating the true market structure that happens under the water. It helps me identify the trend alignment. It shows me sector rotation and macro analysis. So I can see when today the VIX is up to 15 and the TNX, I called for it to go to the 50 period moving average at 4.009 and we're at 4.10. So we're on the move. Same with the dollar, structurally in a bullish mode. So when I look at those factors, I know that there's kind of like a lid on the market because there's pressure from the things that cause it to worry. So it's in high anxiety right now, waiting for further information. And how I use it, when I see a strong bullish market move, I will add additional 112s to my long-term campaign, and it allows me to shorten the time frame on them when I can keep them in and turn them over more quickly and get a little more bullish structure and bias. So I might put in a shorter term 112, 60 or 90 days to help complement and kind of feed that overall opportunity. And I also use it for when I want to be adding protection to my account. When do I want to take advantage of buffering a possible pullback that's going to add to my buying power? So I have structure that signals me where I'm not guessing and I'm not worrying, and I just take action when it shows up. So the current market structure as I analyze the market is right now there's divergences between the ES, the NQ, and the YM futures markets versus the ETFs and the cash markets. The futures markets are in a bearish structure, and the ETFs and the cash markets, when we started the week, were in a bullish position. So I'm seeing some divergence there where price is having a hard time determining its direction. Markets continue to retest the mean, the 21 EMA. So that's when they go home to mom. It's like, oh, I'm worried, I'm going home. I'm not sure whether I'm going to maintain my bullish structure. Am I going to break it? You know, where am I headed? So I'm going to keep worrying. You saw yesterday the Dow struggled with Boeing heavily weighing on the market, but by the end of the day, the Dow had recovered the 21 EMA to maintain its structure with the NASDAQ and the ES. So the markets are mixed, and I'll show you that in a moment, with bullish and bearish structures. So right now it's just choppy. We don't really have a true direction yet. We're in this like a frog being boiled in hot water. We have lots of daily squeezes that are showing up, and what those are is indecision, price consolidation, price structurally. It's an indicator that shows between the Bollinger Bands and the Keltner channels. There's a specific setup that I'll show you what that is. But it's usually a good thing to be aware of what direction that squeeze, when price decides what direction it's going to go, that's usually an acceleration point where the price direction gets worked out, and then it adds a lot of gas to the momentum of that trade or that market. And right now, I'll show you technology has many breakouts, but energy has many breakdowns. So my current observation is that there's indecision between all the markets. The US dollar is on a bull run. The 10-year is also in a bullish market structure. The VIX is bullish, and we're heading our highs today. and the market keeps retesting the 21 indecision. And so we are in a liquidity chop period until further information from company earnings and the Fed come out. I saw the rates, when rates are going to possibly get lowered, and the frequencies dropped today. So the market is waiting, and as new information economically comes forward, they're changing their time frame of when they think they'll see the rates coming down. We know that the market was front running the Fed by 2 times what the Fed said, so we'll see how that rolls out. But I don't worry about it. I just look at my market structure. All right. So see if I can get control back so I can change screens for you. There we go. All right, now we're going to shift over to what my spreadsheet looks like. New share, there we go. All right. What you should be seeing now is the spreadsheet that I start the week with. And on Sunday night, when the futures market opens, I spend time collecting the prices of the market opens. My systems are all based off of market opens, where you start the race, not where you end the race. And this structure, this price structure, gets changed at each interval. And we start with a yearly open. And then I collect the monthly open. And when the year starts, you have both the yearly open and the monthly open are the same. But in February, this will change. And then I'll be working with 3 time frames to determine the trend direction. And then I have the weekly open. And my line in the sand is the monthly open, although the yearly has the greatest importance of showing whether a trend isn't bullish or bearish. That yearly open is important. So I do that for each market across the futures, and then I show the ETFs and cash market so that I can see how they're interacting. They all have different tells. And I've tracked the VIX, gold, the gold volatility index, oil volatility index for oil. And because in a glance, I can see what's moving up, what's moving down. And for instance, gold right now, volatility is moving down. So that's what we want to see. As we're premium sellers, we want to see volatility coming down, and our trade structures are safer that way. We don't have to worry about a squeeze showing up and kind of blowing our strangles on the top or the bottom. And so lowering volatility is great. Oil right now has increased volatility. So that's just something you keep an eye on. It also has a squeeze. It's also above the 21 EMA, which means it's moving up in structure. So each week I go into the week knowing what the market structure is for each market. I then know which ones are accelerating to the upside and the downside. One is breaking down. This one is breaking out. So having a VIX breaking out, what should we anticipate? Additional volatility in the market. Do we have a daily squeeze? That's when price is consolidating with indecision, going inside and waiting, compressing, building pressure. When that gets released, we don't know at this point. I can show you ways we can try to determine whether it's going up or down, but we don't know the direction of when that squeeze gets released. So that's something to keep our eyes on. And then for me, the 21 EMA on the daily, we're bullish above the 21. We're bearish when we're below for the daily. Now, this I color code so I can quickly see what markets are indecision and just chop. So I have a bearish overall market structure. I do have a squeeze, so price is consolidating, but it was and is, it's testing, it keeps retesting that daily 21. And we'll see where it closes today. They look like they're losing their structure a little bit, but I like to wait for the close. So it's currently above. So we have indecision here. What about the SPX? We've got bullish price structure. And what that means is, are we stair stepping higher? When we opened, are we higher now than when we opened? Yes, that's bullish structure. This ES, it opened lower than the yearly and monthly open. So that's what denotes a bearish trend. We are having a squeeze again in each, and we have above the 21. So we have mixed, and we want to know where our strength is and where our weaknesses is, because we need all of these to be in sync. Ultimately, you want to see all of your major markets in sync, moving in the same direction, because then you have the strongest trend. Without that, you have mixed markets, and we're in that kind of sideways chop where they're trying to feel their way through the year open after having such a big move up at the end of the year. They're needing to consolidate and get more information from the Fed and from the economy through corporate earnings, which have started last Saturday or last Friday. So this is where I start with my major markets. I then go into sectors, and I look at, this is where I get some of the sector rotation. I look at the 11 strongest market caps. And again, what's breaking out? Healthcare is currently breaking out. And what's breaking down? Industrials are breaking down. I'm looking for a trend that's solid all the way across. That's your stronger downtrend. And I'm looking for a trend that's green all the way across for a stronger uptrend. What's interesting is I did a review in preparation for this to see how the markets are breaking down in terms of how much bullish is in the market and how much bearish. And as it relates to the major markets we just looked at, the futures, the trend is there's 9 markets that are bullish and 10 that are bearish. So we're in this evenly distributed sideways chop that I always feel like I'm in a boat and I'm out in the ocean, just kind of get rocking back and forth, waiting to see which way we're going to break. But it's good for premium sellers unless the, VIX starts moving against us a little bit, and then it starts to increase our buying power, and we just have to wait for volatility to revert.
Candy, a quick question is,
Yeah.
how often are you updating this spreadsheet? So on the previous page,
Yeah.
is that, maybe you mentioned it, but is that a daily piece here, or?
Well, it can be like, so Sunday night, the futures open, the stocks don't. So I update. So the yearly stays the same. The monthly gets updated once a month, and the weekly gets updated once a week. And then I eyeball it with my charts on a daily basis.
Right. And then when you're looking at the sectors, and
The
when you
sectors,
are determining trend as well, and maybe you'll go deeper into that, how do you determine whether it was a bullish or in a bearish trend? What was your main
sure.
reasoning behind that?
So this gets updated when the markets open. So they don't open until Monday morning at 9:30, and that's when I get to update the weekly open. And what you're looking for to determine the trend is, are you stair stepping higher? You want the yearly to be the highest. Well, you want everything priced to be above the yearly and for a bullish trend. So this is where we opened. Next month, you'll see a number here. So that'll be taken into consideration whether my weekly open is above my monthly open and is above my yearly open, then I have a bullish trend. If I have like this, I'll look for a better one. It's a little more obvious. Like this, the yearly opened the same here. So that's really not new information, but we opened this week lower than our opening of the year. So when you're below the year open, you're in a bearish trend. And then as we gain more information, we'll have the monthly to look at too. And we want stair stepping higher. It'll be good to show you on the charts. It's a little easier than this consolidated area. But in terms of the top weighted sectors, we have 5 that are bullish and 6 that are bearish. So again, we're just kind of evenly distributed in the overall markets. And then stocks, I look at the 7 largest market caps and do the same exercise. I use consistent information to look at all markets, same chart, same information, same structure, same elements, so that I have a good comparison of what's moving, what's not moving, what's breaking down, what's breaking out. And so I get a good top-down view of the market. So someone had asked earlier to look at Apple, Microsoft, NVIDIA, Tesla, Zoom,
Boeing.
Boeing, and yeah, and
I
so
wrote them
those are,
down. I wrote them down for you just in
thank
case.
you, thank you.
So,
Well, we'll do it on the charts too, but here you go. Here's your answer right now. Apple is in a bearish trend with no acceleration and no price consolidation, and it's below its 21 EMA. Microsoft is in a bullish structure that's breaking out. So we'll go look at the charts on these so that this is just a consolidation from the charts. And I'll show you the details of those. NVIDIA, beautiful trend, bullish, breaking out above the 21. Tesla is breaking down, bearish trend, bearish price structure, and then breaking down. So it's accelerating to the downside and below the 21 EMA. And then we'll go to the charts for all the rest of them. But, well, here's a sneak peek at Boeing. Or Boeing, taking the Dow down yesterday. So they opened the year at 257.28, but they've already dropped all the way down to 210.07. So they're bearish. They broke the price structure where they're accelerating to the downside, and they even have another squeeze, and they're below their 21. So if you wanted to look for breakdowns, bearish trades, you just look for your strong. Here's one I'll show you on Oxy. Oxy actually has a squeeze like on every time frame. So that price is really going to make a move. When it makes a move, a squeeze on a daily kind of lights the fire on all the rest of the time frames, and they can be strong moves in either direction depending on the way it fires. Hope that answered it for you, Tom, but I think going to the charts are going to really help kind of drill it home.
and for most of you watching too, and I've seen Candy stuff, but you can if you're using TOS for charting, which is probably the best of what's out there, but you can use TradingView as well. But the basic squeeze indicator is in there. You can use that. I use Squeeze Pro. I know Igor does. Candy may have her own version of it with her background.
I combine them. Yeah.
Right. So, but you can still even just use the basic Squeeze Pro. And I actually removed on mine. So if you watch any of the videos, my squeeze only has the dots. Now I don't even have the actual lines because I'm also using MACD, which is going to show you a similar histogram in many cases. But you can use, one of the questions was what is it? I kind of explained it briefly in the chat that it's a combination of the Keltner channel, Bollinger Bands.
Yeah, I'll show that. I have a chart
but you can use the standard squeeze.
The free
to achieve the
squeeze
same
on
type of thing.
TOS is the TTM squeeze.
Yep, and most people can just use that. You don't need the Pro, but it certainly gives you some additional things to look at here. So if that was a question out there, but you can just pull that indicator. And I believe TradingView also offers the squeeze as an indicator. So.
All right, so move this out of the way, and I'll just start on the ES, and then we can drill into some of the stocks you wanted to see. But now the moving averages are in the dashed lines. So 21 EMA, 50 period SMA, 200 period. So I have what basically are my next go-to levels, but my solid lines are, you can also get this for free in TOS. This is the average true range stop loss. And I do have unique settings on it, but this helps give you, you know, an eye look of average true range. Where can price move to before it reverts? You can see that it came back, wanted to have a reversion back to the mean, the 21 EMA, retest it, and that changed the from a bullish trend to a bearish. But for me, the white solid line is the weekly open. The magenta line is the monthly open. And the solid yellow line, you can't really see it here. I've got a green line for my other charts where I can see the yearly open. So for the ES to be bullish, it would need to look like the SPY structure where it started the week, where the weekly open is higher than the yearly open and is higher than the monthly open. That's the stair step you can see is happening. So now price is falling back again to retest the mom at the 21 EMA and is starting to shift below the yearly. So we're reverting under the yearly open, which that would shift into a bearish mode. I use a weekly open. So, but I look on a daily basis. And so our 21 EMA retest is causing us to drop a little bit below. What we would want to see by the end of the day is price or at least by the end of the week is price closing above the yearly open at 472.16. So that's how the price structure goes. Then I have a momentum indicator, which is a squeeze, and then I put a MACD over the squeeze. It has a little more consistency in the trend and direction. So I combine different indicators together. It's just what my eye likes to see. And so the dots down here are the squeeze. When the red dots are showing, price is consolidating and is gaining energy. But while it's consolidating, it's usually a sideways or sloppy trend. And I'll show you in a minute how the dots are created. And then I have my accelerator of the trend down here, which is kind of a proprietary measurement between different time frames. But you can see when price breaks out above this level, we're in a price acceleration mode. And this would be the time that I would consider adding more short-term 112s in this market. Because when this happens, when I have a squeeze that fires, a squeeze after it fires, the dots go from red to green. That means it's fired. And usually for 6 to 8 dots after it fires is when price is accelerating the most. And you can see that also in the trend indicator here. They lit the fire, you know, it exploded and off it goes. So it's like having wind behind your back. And as long as it maintains this price structure, you've got market structure in your favor that you can take advantage of more bullish opportunities in this market. And then when price is done accelerating, and it goes back inside these two lines, it's just a regular two-way market. You can see for the color whether it's bullish or bearish. And again, when it breaks out and when it breaks down, when it goes below, you're accelerating to the downside. But the regular market is just in the middle, and then you get to see when the foot is on the gas, up or down. All right, so my structure, my above or below the 21 EMA. So I've lost the bullish daily structure of being above the 21. So my head, I got a heads up that I had a bullish structure starting the week, and I've lost that structure. This is where I can see how many squeezes I have in multiple time frames. So I have a daily squeeze here, nothing on the 2-day, nothing on the 3-day, the 4-day, the weekly, no squeezes, but your largest time frame, the monthly, has a squeeze. Now, on each time frame, a daily squeeze when it fires 6 to 8 bars, so that's 6 to 8 days. Well, if you go to the weekly, that's a weekly 6 to 8 weeks. If you go to monthly, that's 6 to 8 months. So your larger time frames have larger movements that you can follow, but they also take longer to develop before they actually ignite. Let's see if I have this. Oops, just a moment. I'll see if I can show you how that squeeze is created. Not that chart. This one, okay. So you'll be able to see by looking down here, your red dots are your squeeze. And what's happening is this is the Bollinger Bands. These are the Keltner channel, or the Bollinger Band here is, sorry, in the dotted area, dotted line. And then we have the Keltner channels. I've got the 2 and 3 ATR Keltner channels. But when when the Bollinger Bands go inside the Keltner channels like it is now, you can see prices squeezing. It's trying to hold the 21 EMA. It might bounce around back and forth in here between the two ATRs, but that's when price is consolidating. So how do you know what direction the squeeze might fire? Well, you can go to, if price is above the 21 EMA, it's a continuation pattern. So it will probably continue to the upside, but it can break down to the downside. So you would be looking for price to be at your lower Keltner channels after the squeeze fires. Now, while the Bollinger Bands are inside the Keltners, it's just consolidating. But when the Bollinger Bands come outside of the Keltner channels, that's when it's fired and has taken a direction. So right now we're in a wait and see mode on, well, most of the major markets. Right now, the ES, the SPX, the SPY, going back to my spreadsheet, most of our major markets have a squeeze on it. So that's huge indecision, and that's a huge impact to our overall market structure, because when these squeezes fire, they usually go in the same direction because one market takes the other market, and you just want to know what direction the opportunity presents itself, because whether it's breaking up or breaking down, we have opportunities to use in our trade structures to take advantage of it. But when it really gets going is when we also have a squeeze that breaks a direction, and then you have that accelerated pace that you might want to add some protection to your portfolio. If we break a 2 ATR with a squeeze and we're accelerating to the downtrend, we're going to be holding that downtrend for a little while. And that's when I add protection to buffer my buying power and protect my portfolio. And I'm always, because I have a larger account, I'm always adding BA 112s and FB 112s just for overall cushioning and protection. Not when the market's doing this, not when the market is screaming higher. I'm not doing it then. I'm putting on my short-term 112s, capitalizing from that bullish move. But then when I'm losing my market structure and I see I'm in a bearish trend, then I might start looking at adding short-term long 14-day puts. Or if I know that the economic news has turned negative for some reason and it could go longer, then I might add additional protection, but I do base it on what the market environment looks like. And here was our opportunity. So what we should see, so this was our run into earnings last fall. This is what we should be seeing again. If the market was anticipating a strong earnings, they run into, so this is a, buy on the rumor, sell on the news. They run into earnings, they take advantage of it, they front run it, they get their earnings, they might sell it off. But this was a strong bullish uptrend to take full advantage of. What are we having now as we're anticipating our earnings time? We have indecision. We have a we don't know. We went from very confident end of last year to wow, we ate too much around the holidays, and now we need to go exercise and work out and work off some of that excess that we created. And so that's how I use that. So let's look at some of the fun stocks.
Real quick, Candy, too, on
Yeah.
your spreadsheet, I'm
Yeah.
bouncing you back and forth. The X's in the squeeze column, are you counting days in the red, the red dot squeeze before?
Yeah, I like that. That's a great question.
Or what is an F1, F4? What's
Yeah.
your nomenclature
Oh,
there?
so detailed and good. All right. So you can see my spreadsheet again, right? Yes?
Yes.
Okay, good. So my X is a daily squeeze. And then what I was making note for you is to show, I put, this is one that's fired. So they fired 1 day ago. So just to be able to show you of what those look like when they fire, what the opportunity is, what a really bullish breakout looks like, and what a breakdown looks like. So that's where I'm going to go next. And then this one that's highly X-rated just has a lot of squeezes on all time frames. So that trend is just struggling, and probably a good opportunity for further bearish trades on it. Okay.
And one thing for me too, and again, this is Candy's show. I'm very much of a reversion trader. So I'm looking at a typical squeeze. I think John had mentioned it lasts about 8 bars or so
6 to 8.
once it fires. So I'm looking a lot of times when a squeeze has not only when it's launching for an input, but I'm looking for a reversal that, hey, it's already fired, which Candy will get into here. I'm looking for it to start to peter out, where it's running out of its move, where I'm much more of a reversal trader, selling premium at a spot before something starts to move back up or go the other direction a little bit.
Safer, more determined trends. That's lower risk. Okay, so let's go to NVIDIA. Let's look what a beautiful bullish trend looks like. So we have structure. Oh, got to move this again. We have structure where price is above the yearly open, the monthly open. We are above our 21 EMA. We have no squeezes right now because it already fired. So it's finishing its squeeze that fired. And this is what you can see when things are price consolidated. It went sideways. It maintained its structure, but it bounces up and down. That's while it's going through this squeeze, consolidating, looking for energy, looking for new buyers. And then boom, it gets it and it's off to the races. It maintains all of the stair stepping that we want. We have a bullish average to range ATR. We're above the 21 EMA. We have bullish PSAR. And so we're off to the races. We broke out. So we're accelerating. Now we did we're probably going to rest now because that's a nice big move, although the trend is not shifted yet. When the trend shifts is when you have two bars change colors in a decelerating. So you're accelerating to the upside, and then when you have two consistent bars, that's when price is starting to wear down and needs to rest, and we'll probably do the reversion to the mean back to the 21. All right, Tesla's not so pretty. Tesla's in a breakdown mode, and this is what a breakdown looks like. We've got a average to range stop loss that's bearish. We have the weekly open that's way below the yearly open and monthly open. But look at this. We've got a squeeze on the 2-day, the 3-day, the 4-day, the weekly, and the monthly. So this trend is highly stressed and struggling, and is going to do a lot of slop and chop for a while. It's not a good look going into earnings. Usually you'll see on the strong stocks, you'll see price running into, 21 days, running into earnings, and then maybe sell off a little bit after the announcement. But people are not feeling the love with Tesla right now, and they're showing it. We've broken the weekly 200 period SMA. And so not a great look, not a bullish stock right now, and just, going to be a lot of back and forth, especially when you have all these squeezes managing that trend on all of those time frames. We have a breakdown of momentum. We have a squeeze that fired to the downside. This is what a bearish squeeze looks like. And then again, accelerating to the downside. So when would this maybe be a trade you'd want to take to the upside? After price starts reverting back to go within the range and you have a green indicator. After the momentum starts to shift, right now we're still in a downtrend, and you'd want to start to see a bullish momentum shift. You'd want this to regain the weekly open, and then the monthly open, and then the yearly. So you would be in a counter trend trade if you tried to trade this back to the upside, because your overall trend is very bearish. So let's go see what that looks like for you on your Bollinger Bands. So your Bollinger Bands went inside, they were consolidating, hit the second level, 2 ATR Keltner channel, and then basically lost structure, broke the 21. It's when it breaks the 21 now that you're in a downtrend, because you have a downtrend in your overall price structure from the other chart. And basically we're in a free fall right now. And until momentum shifts, you're gonna, keep searching for a lower price. Boeing definitely on the chart is busted and just in a free fall. Probably will reach that 200 period on the weekly. This is the weekly, not the daily, but the weekly chart. Probably going to go for 194.71, and it's very similar to Tesla, although it did not have a squeeze that pushed it down. It basically broke down on its own. So we're in a bearish trend across the board, falling lower, and may go back to last year's open before it stops falling. It'll have to try to regather itself down here and recuperate. It's not a good look going into earnings. Again, you can see the acceleration of that trend as it broke the yearly and broke the ATR. We went from acceleration to deceleration just overnight like that. That would have been a really nice bearish trade. All right, Zoom. Sideways trend, bearish, prices below the yearly open, bearish structure below the 21, a squeeze on the 2-day, the weekly, and the monthly. So again, a lot of price consolidation, a lot of going sideways, indecision, but basically breaking down. Right now it's holding the 100 or 200 period. 100 daily.
It's right at the 200, I think, right now.
Below the 200.
Yeah, just
Yeah.
fractionally, I think. Yeah.
Yeah. And Apple. Broken down, lost, we're in a bearish price structure. Oh, here we're coming to the 200 period probably before earnings. But our weekly is below the monthly, and the yearly open, we're below the 21. We don't have any squeezes developing, so we're just kind of breaking down. Although this probably won't accelerate to the downside because that already happened. We're in kind of a shifting, just a trendless, nothing. This is just a sideways, probably going to try to get support off of the 200. But if it breaks the 200, it'll accelerate to the downside. Anytime you have a ticker that breaks a 200 period, they're in a free fall. Microsoft is the last one that I had a request for. And we went from a really nice bullish breakout to a sideways trend to more chopping sideways, retesting the 21, just hugging that 21, indecision. Oh, have to go down to the 50 period. A lot of times when they can't agree on the price, then they need to go to the 50 period to get some energy and find new buyers. And there we found them. We're bullish structure right now. So we are bullish with a 2-day and a 3-day squeeze developing. So prices falling below the weekly open. So, you know, we're probably on a reversion back to the mean again, but stays bullish if it holds that 21. We also have a squeeze that fired. So there's some momentum, but probably because of earnings coming, you know, there's not a lot of follow through. This is kind of like a golf clap. This is not, you know, it hit its acceleration and now it's just gonna, it's kind of like, thanks. It did break out. So price did accelerate as it broke out from its squeeze. And then now it's just like, thanks, I did it and I hit the weekly open. Now I need to go back to mom to get some energy, get some milk. All right. Any other questions, Tom, or any other tickers? We have 5 minutes. That's pretty much all
So
of
I
mine.
think one of a good thing here is, so this is really good stuff. And so Kane's got a lot of proprietary indicators here that you don't have and that you can't really get, but you can still do a lot of this with similar types of setups through TOS with the standard squeeze and using MACD and using Bollinger Bands and the ATR levels as well. So you can set some of these up to try to replicate this. The question, Candy, is how would I use this to determine, let's say I want to put on, you know, a 1-1-2 trade in something.
Okay, what would that something be?
I don't know. So how would you would use your market profile to figure out what that something might be first to see if there's a good opportunity. So I want to just curious your thought process of, hey, I have some buying power outside of stocks. What would I consider here for a kind of a standard 1-1-2 trade that you might want to put on based upon some of your profile here?
Well, oil is starting to try to get some traction. It's recovered from its bearish downtrend. Now it's gone more neutral. They're still below. This is in a more bearish, but this would be a good opportunity because it looks like it's holding support. It's holding the weekly 200 SMA. We are still underneath the 200 period and the 50. We have a bearish, but we're holding these levels. So the one caution I would have is when we have gold on the squeeze, these are the high compression squeezes that can be problematic, that can actually fire short before they then revert and go back up. Although we don't see any stress where it looks like it, except for a little of the bearish momentum. But right now we're holding, sideways structure on momentum and just pulling back a little bit. But if we hold that 70, what is that? 70,
Around 70, isn't it?
yeah, yeah, probably 70, 71. Yeah, it's hugging the open, the yearly open, like 70, 71 in that area. If we hold that, that's a great opportunity to put more capital into this in whatever you want to put.
And again, for me, on some of the 112s, I'm trying to put the odds in my favor. It's come down, it's holding some support. Doesn't mean it can't break it.
Right.
But with a naked put that's decently out of the money, it gives you some opportunity to catch something in a trap here. And I'm looking to see, is there potentially maybe a bottoming of something, or is it finding some support?
Yep.
Doesn't mean it can't break down. Anything can go any direction.
Yep.
Okay?
Well,
We're just putting probabilities in our favor.
exactly right. I'm a probabilities trader. But here's your other opportunity on a strangle. What do you have here? You've got a lid. You got a lid you got to break through. So if we flip from bearish to bullish, don't we have a heads up that our trend has changed? Otherwise, right now, we're just in a little bit of a pullback and sideways. So that's a good time for a strangle.
Mm-hmm. So oil's a possibility. You've also got gold selling decently today a bit. So, and gold's been selling off a bit more recently. So gold's starting to come down. I don't know that the end is in sight yet for gold.
No, we're accelerating to the downside. We've got really bearish and a squeeze, probably headed for the 200.
Right. And for me, I have a gold 112 on, and I finally got an ITM little piece that came up today on the long puts. So we're finally getting into the trap a bit on gold, which is great. I don't mind it. I'm just looking to see where could I sell naked puts potentially if I wanted to put gold on, but I also don't want to get in front of a runaway train before that. So again, this one of the ways to use these is, are you trying to put a 112 on a runaway train? Trains don't break on a dime. So when the train gets moving, you want to stay out of the way. And when a train slows down, it takes a while to get going. But when a train's is getting up to full speed, it doesn't stop. So you're really looking at the momentum here and giving yourself the probabilities that we're not really showing any signs of a bottoming or reversal yet here on gold. So there can be some more pain and downside to go on gold. We just closed a strangle 5 minutes ago on gold. So it's perfect for what we're looking to do. And maybe another strangle opportunity is starting to present itself as volatility increases. But just give yourself the best chance to be successful.
Right, because gold volatility is coming down. So let's see where it is on its trajectory to put the odds really in your favor.
Yeah, it's come down from 16 to 13 change, and
and a squeeze that fired with not much. It could, because it had broken down. It's just a limp. There's no structure there, so you wouldn't have to worry yet for volatility to move up on you. It's just a sideways trend.
Good. Any other questions from the gallery here before we wrap up? I think we're at our hour, so I want to be respectful of everybody's time.
Yeah, appreciate you coming. If you have questions, I put a link out there. Go to Candy's Corner Market Structure. I'm putting charts out there as I see important things to consider. So please stop by. And thank you all for your time. Thank you, Tom, for hosting this for me.
Perfect. We do have a charts channel, so Candy, if anyone requests something too, you can either put them in your channel, or if you want to just drop them in the general charts piece there, I'll drop some things in there with my takes on it. But if you have requests, anybody wants a chart on something, you can get Candy's take, my take, Igor's take, what have you. We can put something together for you. If you want to trade that S word or stocks. So
Oh,
uh,
yeah, I don't do that.
I will even look at I'll give you the chart on it. I will never trade it, but I'll give you the charts on it. So all right, Candy, I appreciate the time today.
Oh, I'll leave
Thanks
one.
everybody. We'll get this video posted up. I should be able to get it done within the hour here. So take a look. We'll put it in Candy's
Here's another great
chart as well.
piece of gold as you leave. AMD breaking out, beautiful. Squeeze, accelerating, above, structure bullish. So if you do like chips, there's a good chip for you.
It's interesting to look too at what's up today on a down day that we've been accelerating a bit for this last hour that we've been on here. And
Boeing is up today.
I was going to say, I got Boeing and United Health,
and
but
USO.
And then you got Bitcoin. So
you want to see some, I know we're leaving.
Yeah, it's all good.
But want to see some ugliness. Oils are just structurally struggling. And here is the one that's got a squeeze on every time frame, and the monthly has the high compression squeeze. So it's not a lot of structure.
Exxon looking pretty ugly.
Oh yeah. Oh.
Yeah, Exxon, Devon, Oxy.
Oh. Yeah. That's a sad chart.
Devon's looking pretty ugly too. So
yeah, that's accelerating to the downside with a squeeze. It's probably going to fire down too.
You know, I'm going to add one more thing. I was just looking over some charts, and there's a number of home builders that popped up on my scan for where squeeze is firing, and they all look to the downside, I think.
Oh, wow. Yeah, there's XHB.
And then from home builders, you may see this roll over into the Home Depots and the Lowe's. And so it's something I just kind of noticed now. I'm going to be watching it, looking for opportunities there.
And if you want a really ugly chart, look at GDX and the gold miners. So I'm kind of excited. I want this thing to level out here, because I think I really like the gold miners into this year. But it is an ugly looking chart right now. That thing has been hit pretty good. So anyway, I think the goal here too is not specifically every individual indicator, but she's putting the odds in her favor to make trades. And I think if you put the probabilities in your favor, okay, and you give yourself the chance to potentially be on the right side of that and know where potentially issues can happen, you certainly improve your odds of being more successful. If you have the right strategy that's giving you a good probability of winning, being a premium seller that we're giving ourselves the chance to be right. We can be slightly wrong as well, being a premium seller. And if we have a decent idea where we think things are going based upon momentum and the movements here, you put all of that together and you give yourself the best chance to be successful, and you just follow your plan. So good stuff. All right. Thank you, Candy.
Thanks,
appreciate
Tom.
it.
Thanks, Igor.
See you, everybody.
Bye.